And I love the point you make about, well, people don't wake up in the morning thinking that they really want to interact with their bank. And certainly I don't think anybody ever woke up in the morning and thought, I'd really, really like to go to my bank branch. I suppose that's a very interesting point you make. The difference between banks that have technology installed and banks that are actually living digital. And that certainly is a huge, huge step. So how do you manage to make banks get into the idea that they're the ultimate example of what I call the bold generation, born analog, living digitally? And how do you get them to actually start living digitally as banks when you're trying to reinvent banking?
If you think about how banking's change, or banks adopt innovation through 3 stages of change. This is obviously my perception. There's 3 stages of transformation. The stage 1 is when you adapt your current capabilities to digital technology. So what you sell in store, in branch, you sell online. Exactly the same way, same data captured, same underwriting and so on. This creates a series of capabilities, skills, cultural behaviors, talent, etc., that allows you to evolve your business. And what happens is that the banks go into that stage and they start evolving into something that is slightly different. So yes, that's a good chart to have. So what happens there is that these old products and these new propositions that have been developed and new cost takeouts have been developed, they channel into new products. And this culture change and this new talent coming together creates a new business model, and you get into transforms. Now, all the banks that I know of today, with a very few exceptions, mainly in Asia, at best are in the evolve stage, because the transform stage requires the bank to rethink what they're about. So it's no longer selling financial products, but it's selling financial outcomes. So the new bank is something that requires a profound transformation, which requires, for example, no longer being designed around product silos, but being designed around customer side. So the product becomes a cost center. So the lending platform and the investments platform become a cost center, and the P&L is driven entirely by the understanding of the segment that you're dealing with. Now, what's interesting about this model is the fact that it requires profound rethink of how the banks are operating. And this is not a technology problem, but it's a legacy problem, and it's a cultural legacy problem. I think one thing that could emerge from this gigantic transformation is, in theory, some of the banks could decide that, yes, I will adapt this in this new way. But another option will be that the banks will just realize that they are a community of users, and they will work with third parties to provide the financial product. And the banks will be responsible for retaining that relationship with the customer, maintaining that engagement with the customer, and making money, obviously, from the deposits and so on and so forth in that way. So I think we may be seeing new models coming about. The whole banking as a service model that we are talking about could be a way of addressing some of these issues. But I am not sure that the ultimate new bank, the business model of how this new bank should look like or will look like, is clear to anyone at this stage.